Welcome to this TradeReboot Global Commodity Community. And this is the second largest virtual conference of the TradeReboot. And in this virtual conference, from last 1 year, we are seeing a lot of virtual conferences are happening. And now, after a lot of time gap, this virtual conference is happening, and we are seeing that virtual conference response is very low. But I'm thankful to all of you that in this virtual conference, the registration has crossed more than 6,700. And the first topic itself, people wanted to be more than 4,000 people has interest their own into the India and UAE trade. This virtual conference is organized on the matter of to have the awareness on the trade, on the finance, on the trade finance, on the logistic, on the insurance, about the international trade. This is the second conference within the 6 months in this pandemic, and we have people from the across entire pan-India and as well as the global, and people from the shipping industry, people from the commodity industry, people from the banking, people from the fintech area, all around the people are there as a participants, and even all the chartered accountants are also there. So this conference being thought of it India and UAE corridor, and we know all that India total import and exports is around more than $700 billion. If we talk about $700 billion turnover, and if we talk about India and UAE part of it, it's around India UAE is about a $70 billion inbound and outbound also from the Dubai, from UAE and India cross borders turnover, $70 billion. So it shows that 10% of entire India's cross-border transactions are from the 10% are from the UAE. So it signifies that India UAE cross-border business is very strong, and in the years time to come, it's going to be stronger and stronger. If we talk about entire UAE data, so if we talk about the UAE also have around 600 billion cross-border transactions, 600 billion transactions. If we talk about the exports from India to the Dubai, UAE, food items are there, machineries are there, jewelries are there, vegetables are there, and clothing also are there, and then and all metal kind of there. If we talk about import from Dubai, UAE to India, it's are from the petroleum product, metals products, stones, wood, chemicals, and petroleum products are there. These are the products which are from UAE to India. So these are the huge opportunities as well as networking opportunities for all the participants to meet and greet and have network amongst the banking people, insurance people, trader people, and we have a lot of trades are happening. And if we talk about global commodity trade, which are happening from last 100 or 500 years, the same process are happening. Now in this pandemic, we have to change. We have to penetrate the digitalization into the commodities, and with the help of digitalization, we can bring the efficiency and growth in the commodity trade by 30%. I'm saying that if we utilize the technology into trade, we can bring the efficiency in entire cycle. So whether from the commodity to the insurance or to the shipping, entire altogether is a 30%. If we are having a cross border from India and UAE, so around 70 billion transaction, so we increase by 30%. So it can be immediately increased to $100 billion. So that's a 30% efficiency we can bring to the system if we go in. In the COVID and post-COVID era also, we have everyone feel unsafe going out of the house, and a lot of people are talking about how we can reach to the banks. So now from last 1 year, everything's on the digital mode. Every wanted to be all the times on the digital, whether it's sitting in a home or any places. So rather visiting any bank or commodity or insurance company, everything has to be on digital. So this is more on the side of a digital era. Let's all the transactions should be on the digital. Now come back to this session. This is the entire conference of the 3 days on today for 3 hours. Three topics going to be there. Again tomorrow the three topics going to be there, and on first three topics are there. The first topic which we are having today is a future outlook of UAE in commodity trading post COVID scenario. Then after an hour, 1 hour innovation digitalization in banking. Then we're going to have digitalization in shipping industry. So entire three topics we will discuss today, and I'm having very esteemed panelists of today's session. We have Les Malik, CEO of the Dubai Gold and Commodity Exchange Group. We have the Salam Al Sharif, BIR Ambassador Chairman, and BMR also Chairman, and even he's also Sharif Metal Recycling Group. Also, he's the chairman of this, and he's very humble and down to earth. I have the privilege to meet him personally, so I like him very much. So thank you, Salam Bhai, to be part of it. Also, we have the Soheil Zali. Yeah, we have the Soheil Zali. We have the Anil Jena. Anil Jena ji is he's SVP and head treasury from the Olam International. So he knows the entire commodity, which are possessed by the entire Olam. So he's there, and we have the moderator today, who's going to take this entire lead of this entire show. None other than the Soheil Zali. Soheil Zali, let me introduce him because he's going to be panelist. So he will introduce other panelists. So I had to take a chance to introduce him into this panel. Even I'll also ask some question because I know that Soheil, you are taking taking moderation part. So I have some questions which I thought that I could ask to you so that we can also be take it your participate or same. So Soheil ji is an expert in international trade finance. He is the regional commercial director at TradeWind Finance, an international factoring and supply chain finance company with having offices in more than 20 countries. He also has the additional responsibility of being regional operational manager of the West and South Asia. Soheil's expertise and astute risk management have helped in his excellent factoring, one of the fastest growing field in the finance. He also experienced in managing supply chain finance. He with this I welcome Soheil with his introduction, and before he take over as a moderator part of it, I'll have some question for him. So Soheil, I just wanted to know how the region performed as compared to other offices, because your region, you being part of it, you handling it. So how your region is performed well, you are getting it more client for your company in versus East Paris versus Europe. So can you just show your trend, how your business trends are having your performance? So
yeah, thank you, Dhiraj, for the introduction. Important question, especially in UAE, because what we see in our region, that some countries like UAE roll out a very successful vaccine program. So we see a lot of movement and a lot of recovery. Even the countries like UK roll out a very strong vaccine program, and they are recovering faster as other European countries. When you look at Deutschland, like Germany, the second, the third, and the fourth wave is on the horizon. In terms of UAE, we are growing faster as other countries. The demand is there, and what we see more is that the domestic business is more. There is more working capital demand as when it comes to the export, because that is, easy to answer because the other export tradition countries are not in the lockdown. So we see a good trends in, especially in UAE, and we see around almost 70% of the population get vaccinated, which is very strong, and we have a good hope in this region.
Good, great. So next, my second question to you, being you are handling the trade finance and invoice factoring. So what kind of challenge SME people face it while getting the funding from the banks?
Yeah, I mean, when we speak to the SME segments, we get the sense of fear and panic among them in case of possible default. And the financial institution, as we all know, considering SME sectors as a high-risk industry. So, and offering them a credit facility is always higher in terms of pricing compared to the larger corporation, right? So that is a challenge what they are facing. And of course, the lack of necessary collateral to provide to secure the loan. But I think we all know that SMEs are the backbone of our country, and especially in UAE, where we have 90% of registered business or SMEs in the products or in the service. And when you look at UAE, the SMEs challenges, we see a total bank lending to SMEs is only 4%. So I think we all, as a financial institution, have to react to different SMEs, look at the SMEs more from not only from our view. We need to understand the business. We need to play the advisory role in order to give them the chance to grow their business.
Good. So the last question, which connects to the our topic, which is the outlook of the UAE in commodity. What's your thought? You being you are moderator, so let's ask the same question to you, which you going to ask to all the panelists over here. So how the UAE markets will look like for the commodity trading?
I mean, as I mentioned in my presentation, I think, and what we discussed about the recovering of the country. So the sectors is something which I see going to grow more in probably by the end of 2021. But I would like to gain more experience from other panelists today. But I see that since Dubai is growing fast and we see a lot of developments and recovery from the pandemic, I believe this sector gonna grow more faster, but something which I would frankly see by the end of this year or probably at the beginning of 2022.
Okay, so good. So now I'm handing the entire proceeding to you, so you can take up this entire session with Jena and Salam Bhai and Pascal. So thank you, Soheil, and please take over the charge and start moderating.
Okay, thank you, Dhiraj. So good morning and good afternoon, everyone from the UAE again. My name is Soheil Zali, your moderator today in this session. I'm based in UAE and representing TradeWind Finance, which is a German trade finance company, as Mr. Dhiraj already introduced me. I would like to extend my thanks to the entire TradeReboot team for organizing this session and inviting all us for this discussion. I think what we will discuss and what we will learn today is what we experienced last year. We understand the business is going to look different moving forward. And that is something what we're going to learn today. And I hope whatever you take away, notes and learning, I hope we can implement in our future action and decisions. So I'm very excited. Having said that, I would like to kickstart the session by introducing my fellow co-panelists who are joining here today by Mr. Les Mail. He's the CEO of for both the Dubai Gold and Commodity Exchange and the Dubai Commodity Clear Corporation. In 2019, the Dubai Gold Commodity Exchange Group traded $866 billion worth of commodities, including metals and hydrocarbons. So very excited to hear from Mr. Les Mail about the topics. And our second panelist is Mr. Engineer Salam Al Sharif, a chairman of the Sharif Metal Group, which was established in 1993. Sharif Metal Group is a very regional and as well globally well-known and recognized company. in field of metal recycling. So welcome, Mr. Engineer Salam Al Sharif.
Very much.
Our third panelist is Mr. Anil Jena, experience in banking. He's currently spearheads the treasury and the trade structure business and agro commodity conglomerate Olam International. So welcome, Mr. Anil Jena as well. So best of luck to all of you. And before I start with my presentation, I want to welcome you for any question you have to use our chat box features. So we will try to answer you in the time we are online. In case we cannot manage it to answer to you in the timely manner, we will please contact TRGCC and we will try to answer you even when we are offline. Thank you very much. I'm going now to share my screen and starting with my presentation. I hope you can see my screen. Mr. Salam Sharif, can you see my screen?
Yeah, I can see that quite well.
Perfect. Thank you for confirmation. So I would like to present today and explain more about the UAE and international trade landscape 2012 and beyond. So let's look at us first where we come from. Let's recap the last 2 years and look at the situation at the time. According to the Bank of Asia Development, the world trade finance gap stood in 2019 by 1.5 trillion US dollar, and that was before the COVID-19. We have seen a lot of supply chain disruption in the world. We face a liquidity crunch, and then we all learn that the trade going forward going to be very different. Many banks have shown a high-profile defaults and supply chain instability, and this case will continue, unfortunately. And it's forecasted that the global insolvency going to be by 26%. So we are assuming that the claims to the insurer going to hit them thick and fast, unfortunately. Some countries like Germany, and I would say the most European countries, start to protect their economy and their insurance companies with the government default guarantee. And such a guarantee will expire in summer 2021. So we're going to see how the government's going to react to their guarantees which they issued to the insurer. Then we're going to look in the landscape, the current landscape where we are at the moment. The trade finance gap is expected to be double as a result of COVID-19, caused by credit losses, disruption to the supply chain, and business closure. SMEs across the world, especially in Middle East, are still facing barriers to access to credit and loan. And a lot of companies, what we observe, are very cautious when it comes to approaching finance and loan options, and that approach that will continue, and we see a trend here. And let's look at us where we are heading. Where are we going actually? Some countries like UAE, as I mentioned, have rolled out a very successful vaccine program, where the rest of the world are still struggling. So we see some countries like UK or UAE gonna recover faster as other countries. Traditional lending will scale back and will be tougher due to the stricter credit policy. And when in case lending practice stabilize and mature, SMEs still will find themselves being able to grow their business, but they would generally face to get the finance support from the banks. In terms of working capital, when we look at the post-COVID situation, what we're going to see as first is that the companies are going automatically purchase more raw material as economy grow. We expect to see a surge of payable, the inventory of the bank, and then the final receivables, one after the others. Each of these aspects of working capital going to need a different financial technique. So first, we expect to see a substantial drawdown on supply chain finance program. We also expect to see a rise in usage of receivables financing program, for example, which actually have been typically very muted in the recent months since the business, the sales drop in the traditional sector like automotive and primary metal. But compared to payable and receivables financing, inventory finance is the area where actually most of the banks aren't particularly active. So that is what's going to create a squeeze for a lot of companies as they seek to build up their inventory to protect themselves for a supply chain shock. And I heard in a lot of different forums when it comes to the liquidity that a lot of companies or a lot of experts are saying that there is no liquidity, which frankly speaking, from my point of view, that is wrong. I believe the liquidity is there. Our banking system is still in a good shape. We have a good banking system. The main issue is though not the liquidity. The main issue is actually, and the challenge is to get into the supply chain. That is causing a lot of the banks to look at their operational and technology capacities. They have to support the clients. Let's say in the anticipation that the working capital surge demand will increase and will come in 2021 and at the beginning of 2022. And that is where a solution like fintech, what we're going to learn in these next 3 days, going to play a big important role. There is a modern platform which automated onboarding tools which have the ability to support onboarding larger numbers of suppliers in a very quicker manner. Let's now look at the recovery of the global trade sectors. And I think that is something which we all need to look, especially the finance institution who are trying to invest in the different sectors, what I'm trying to display here. So at the beginning, we can confidently say that at the beginning of 2021, IT service, agro-food, beverage, and chemicals gonna grow. We're gonna see in H2 that in the second half of this year, that sectors like electronic, transportation, and machinery and construction gonna be the sector which we see a high development. Then we look at the 2022, at the start when we moved there, we see that sectors like household equipment, transportation, and metals gonna be products which gonna grow as well. And in case of 2023, when we move to this year, we will see that probably Europe has rolled out their program. A lot of people get vaccinated. People are more in the shopping mood, going out. There is less working home options. So we see sectors like textile or transport equipment gonna increase after in 2023. So that was a bit overview about the UAE and international trade of 2021 and beyond. I am happy to, I hope I could address all your questions or your concern. And I am happy to answer all the questions you might have. You can please contact us and visit our online booths. We are happy to answer your questions. So I would like now to start with the questions and with my co-panelists, and I would like to start with Mr. Les Mail. Hi, good afternoon, Mr. Les Mail. Nice to meet you.
Good afternoon.
I hope I pronounced your name correctly.
That's fine.
So I have a couple of questions which during I was visiting your website, and a couple of questions came to my mind. I want to address it to you. So the first question is, do you think we are entering a new commodity super cycle?
Okay, so we start with the easy questions. Thank you, Mr. Moderator, and hello, good afternoon to everybody. Yes, I run the DGCX group. We trade about $2 billion of notional value a day across 4 major asset classes, with the largest derivatives exchange in the Middle East. Do I think we're entering a commodity super cycle? I'll answer that question in 5 years, I guess, and give you a yes or no then. But all the signs, the signals are there, aren't they? I think the dollar is somewhat weak in comparison to some currencies. You've already mentioned the pace of the vaccine rollout in the UK, and I think sterling is holding up very much against that. The US has struggled to get its vaccine program going. Possibly the general elections in Q4 last year was a bit of a stumbling block, shall we say, being somewhat political there, but they'll catch up. So we've got a bit of a weaker dollar. What we do have, and what we've had for a sustained period of time, are low levels of interest rates.
Absolutely.
And this is combined with a kind of pent-up demand. Maybe I'm an eternal optimist, but when the shackles and the handcuffs of the COVID pandemic are released, and we've already seen this in China, of course, with their positive GDP growth last year. But when those handcuffs are released, and I think the UAE post-Ramadan will start seeing even more evidence of that, then we could well get double-digit growth in GDP to some countries globally, but also we'll have, I believe, yes, a commodities super cycle following on the last one of BRIC. When it comes to the UAE, we've obviously got the Expo 2020 starting in October this year as well. The pace and the success of the vaccination program by the federal authorities, I think, will mean that COVID will be contained, and I think Expo, I'm sure, will be a huge success going forward. They've already administered, I think it's something like, is it 70 or 80 doses per 100? So at least half the country possibly is now being double vaccinated. What does that mean for commodity prices? I'm not a trader. Fortunately, we run the exchange for the people to trade the forward prices. But if we are entering a commodity super cycle, and that's an if, then I think we all have to be very mindful of that and have the necessary risk management tools in place. We've already seen emerging signs of silver growth. That's at an 8-year high, I think, at the moment. But I would also point to some of the precious metals in the electric vehicle space as ones that we actually don't trade, but currently, but ones that perhaps will show some growth signs going forward as well.
Yeah, perfect. Thank you very much. So because you mentioned silver, do you think silver is a forgotten precious metal? Because when I look at the pricing, for example, I was just looking today, right? So we have a gold, which is a minus price, and 30 days before the price was much higher. And look at the silver pricing today, and the 30 days ago was the price almost the same in the negative area. So I want to see your view, how you see actually silver here.
No, I'm quite a supporter of silver. I do think it's forgotten. I think when you look across the trend is your friend, so to speak, in trading circles, we see silver has, over a period of time, grown in value for sure. I think there's been an education during lockdown, and we've seen this in terms of the retail sector embracing cash equity markets, particularly. Cash equity, stock exchanges, stock markets globally during the pandemic were almost at record highs, which if a pandemic doesn't bring down the stock market indices, then what does? But I think that's a lot of demand from the retail sector. Plainly, it was looking at other commodities, other asset classes, other contracts that they could embrace. Gold is the headline safe haven, and I think silver is often cast into the shadow for that. I think that's, as I say, it is forgotten. At DGCX, we're going to be launching a Sharia compliant silver contract this year. So it's being Sharia compliant from the Sharia scholars means that it has to be a physically delivered spot contracts, mandatory delivery. And I think there's, as I say, with there's not so much the day-to-day volatility as the trend in silver that we've seen. Our values and contract volumes have gone up over 300% year on year. So it's no great surprise that I'm emotionally attached to silver in that regard.
Okay, interesting. Thank you very much. So last question I have, because we were talking about the UAE, and I want to see what measure are the UAE taking to improve the credibility of gold, because there are a lot of discussions inside and outside the country. So for me, and I think for audience, would be interesting to see which kind of measurements the UAE will take.
Yeah, I mean, there's a lot of initiatives that are underway at the moment, and I would point anyone listening and viewing this successful conference to look at a Q4 December, I think it was, announcement from the federal government here in the UAE about gold trading. Yes, they're putting in place a bullion committee, but they're also doing some other measures which are quite interesting, I think. Putting in place a database to capture all the contact details of every trading organization is one. Number two is to put in place an Emirates good delivery, if I can call that an EGD, standard benchmark of quality for gold. And then thirdly, a federal gold trading platform to have a track and trace, if I can call it that, a traceability of the gold that is imported into the country and traded therein. So there's a lot of focus from government bodies and from the ministries in order to improve the credibility and profile of gold trading in the UAE. It's a journey, it's a constant sort of evolution, and Dubai, as we all know, prides itself as being a city of gold, and anything that the federal authorities do to improve the credibility can only be for the good of the market.
Thank you very much. I mean, happy to hear that the country in UAE at least taking this very serious and trying to find a measurement to increase the credibility of gold. Thanks, appreciate it, Mr. Les. Now, I would like to move to our second panelist, Mr. Engineer Salam Al Sharif. Hi, Mr. Sharif. So let's start with the first question. What is the outlook of the steel industry, and how do you think the coronavirus had impacted the import and the export of steel in the UAE? Mr. Salam Sharif, you are unmuted.
Oh, I beg your pardon. Okay, well, thanks for alerting me. Yeah, at least I heard your question. Thank you very much. Now, well, the steel market is the backbone commodity for all the construction, the infrastructure, the households, and for day-to-day appliances. Now, we realize that with the COVID, which has really dislocated the economic different sectors, including all the construction, the automobiles, the households, the consumer confidence. It has really put a lot of drop on the consumer confidence indicator. And it has also, by realizing the oversupply of the construction, which was on the overspill of the 2008 construction boom, which was also in the aftermath of 2009, the meltdown of the entire financial sector. It has basically shown up after 10 years of supply ironically, a lot of those developers could not really meet their deadlines. They had completed some of their projects 10 years later, believe it or not. So with that kind of oversupply, together with the COVID-19 pandemic lockdown, it was really quite paralyzing the economic activities altogether. Nonetheless, and that is strangely happening due to certain fundamentals and supply and demand, with the valley rupture accident that has thrown off hundreds of millions of supplies of iron ore, which has created a huge vacuum in the supplies to the major Chinese importer, which China imports and exports almost half the world's consumption on their own scale. Now, what that has given about steel prices we haven't seen in 12 years. And the impact of the steel prices have gone up almost 70% from the beginning of 2020 until the last quarter. Now, that has definitely been a little bit of, if you like, I can say it has balanced out the complete paralysis of the economic situation due to the slowdown in the activities and slow demand, but that overall demand from the Chinese has put the prices in skyrocketing phenomenal prices, which has benefited all the steel mills. And I can say this is the only factor that kept their head above the water, because all had worked on a barely 40 to 50% capacity, which has put them in a lot of losses in their bottom lines. But overall, the activity has been here supported by certain regulations of the UAE in banning the export of the steel scrap during the lockdown and during the pandemic, to basically try to protect the local industries and the local available mills out here like Emirates Steel and Al Ghurair Steel and others. There has been an overall shift from globalization to protectionism, which has been the new phenomenon, has been seen, started with the United States and all the big players, and then it dropped into the local, the developing countries at, as they say, charity begins at home. They gotta support their local industries in terms of availability of raw materials and try to protect the local industries by having more of levies or banning more of the finished products import into the country.
Yeah, thank you very much, Mr. Sharif. Appreciate that. So when we were talking about the pandemic, there are associations like BIR and BMR. So how you see the role of this association in tracking the difficult solution during the pandemic? What was your experience?
Well, I mean, the associations of BMR and BIR. I represent the Bureau of International Recycling, that is the World Recycling Federation, which is headquartered in Brussels, and it has about 800 members from 76 countries, together with about 36 national associations. And BMR, Bureau of MiddleEast Recycling, which I'm chairing also, is a national association of the BIR. Now, this is the only body that looks after the recycling industry, and it is basically the main platform for all the traders and the recyclers. It has realized that in the difficult times, there's got to be a lot of coordination and communication to the extent of having to hold webinars every other month just to really be in touch with the stakeholders and how their welfare is becoming to overcome the difficulties of the pandemic. A lot of sharing informations and a lot of advices have been provided, together with I would say the exchange of know-how from one region to another one has helped a lot of overcoming for the SMEs as well as for the newcomers in the business. Now, there has been a lot of awareness as far as the environmental concerns, and ironically, the people who have no idea that the death rates on annual basis due to the pollution is exceeding 7.5 million people every year, and nobody pays attention to it. But with all due sympathy and heartfelt, I would say, concern about the rates of the death for the COVID casualties, we've realized it has not exceeded 1.5 to 2 million worldwide ever since the eruption of the pandemic. But pollution kills about 7.5 million people, and nobody even knows the numbers. So in our industry, when we realize that our recycling business preserves the natural resources and reduces about 75% of the carbon emissions and the air and water pollutions reductions tremendously, with the energy preservation and opportunities for employment, that is something that has been really highlighted and advocated during the pandemic more than any other times, because any industry would require to reduce their cost of raw material, increase the efficiency, as well as reduce the energy consumed into their end product to be having a sharp competitive niche. So with that awareness, we have, for your surprise, gained more members than any other times, even in the good old times, because when people are making money, they may not bother much about associations, but when it is going to be tough times, really they get together and they want to hear more and get some more remedies. So as they say, when the going gets tough, the tough gets going. We're trying to make our members more resilient and sustainable for the future. In that context, I will also add that we have the next conference coming up for the BIR in the month of May, and we have one for the BMR, which is in November this year, as physical conferences. So we look forward for all the audience or the participants to pay a heed to what's going on. That is the future for sustainability, and this is the going forward.
Definitely. Thank you very much. When was the date exactly? Can you please repeat so then everybody can remember the date?
We have the May 28th and 29th of May for the BIR, and 14th to 15th of November for the BMR. And that is happening in the UAE for the BMR, but the BIR is happening as a hybrid conference. Physically will be in Brussels, but with the webinars to get the rest of the world participating. So that's the digitalization advantage. We get everybody still on the same platform despite the disparity of timings and destinations.
Exactly. Perfect. Thank you very much. So the last question, I have one more. What is the impact of COVID on SMEs and the international trade? How you see this?
Well, you have covered something on the SMEs, and I heard from our financial the financial perspective of how they look into SMEs. But if we realize that it's the backbone of the industry, as you rightly said, 90% of the businesses are SMEs, whether it is entrepreneurs who have just come up, and whether it is even those who have been for long years but still in the service industry, and they can grow to a certain extent. Now, realizing the fact that the SMEs are the seed that you sow down in the fertile soil for you to reap ahead in one decade or two. All the large corporates were only SMEs to begin with.
Yeah.
Now, they were mostly affected, I understand, because the sustainability of their financial maybe portfolio or their structure may not be as resilient as large corporates, but they have definitely suffered big times during the lockdown. Some couldn't afford even their own payroll, so they had to lay off a lot of their employees. And that's the bad news part of it. Now, the good news is that they have realized that they can still manage to outsource a lot of services and employment. Instead of full-time job, they could still have part-time job getting the similar job done. Jumping us into the AI and into the IoT, we realized we had to really leap 10 years forward to realize we're all now, if you like, digitalized awareness people, unlike those who have missed out on the technology earlier. Now, the move forward is that if the SMEs who were not on a solid background, they were not acquired by big conglomerates or big corporates, they may really have to drop down and vanish. So there's been a new model now in the industry that a lot of acquisitions and mergers have taken place, and they realize the model of the business is quite good, but they lack the resources. So the big guys pick them up and make them part of their portfolio. And that is the good news. If that is a future and promising business, it will have the right hand to pick it up with. But nonetheless, now with all the construction being more of a stagnant, as well as a lot of the sentiments of the market is not moving good, there is a lot of difficulties and challenges for the SMEs. So let's see that if either you have a good model of business, you're lucky to be bought by a big company. And if not, you have to restructure your system, realizing now the capital-centric approach has to be now within the human resource, I would say, approach. You do have to focus on the human capital as your main assets. Try to work within a certain advanced model or restructure your system. Otherwise, you're out of the game.
Totally agree with you. I mean, in my presentation, I tried to cover a lot about SMEs and the challenges. And I think one point I would suggest, and I hope you agree with me, is they view the SMEs have on the financials. So I think they need to look at the different options and not just having this looking after the traditional asset-based lending. So there are a lot of different options like supply chain financing, account receivables financing, crowdfunding, and venture capital solutions. So there are something which is, I think, very important for the SMEs to look at to this moving forward and looking at the different options and looking at banks from the advisory side and not someone who just put the money in it. So that is something what we all need to think about.
Absolutely.
Yeah.
It's a change of model concept, not only the good old school that will survive. I mean, we all see what has happened to the certain companies like Kodak and companies like Motorola and Nokia, where they were doing multi-billion-dollar businesses, and all of a sudden they couldn't cope with the technologies, so they dropped off and vanished. So one has to really come up with keeping the adaptation and resilience to what's going on moving forward in digitalization. It's got to have the quick, resilient adaptation. Otherwise, you're out of the game.
Yeah, absolutely. Nokia is a good example because my first mobile was Nokia, and look at now. Yeah, well, it's a good point. So that changed a lot. No,
absolutely.
Thank you very much, Mr. Al Sharif.
My pleasure. Thank you, sir.
Thank you. Then let's move to our third panelist, Mr. Anil Jena. Hi, hope you are doing well. And I would start with the first question. How do you see the India-UAE relationship in the future? That is, for me, I would say, as a kickstart, the very important question.
Thanks, Mr. Soheil. Can you hear me?
Mr. Anil, I can't hear you. Your voice is very low. Try again. Unfortunately, I can't hear you.
Hello?
Yeah, now perfect. I hear you. Welcome.
Okay. Sorry, so some technology issues as usual. Yeah, thanks, Mr. Soheil, and thank you, TradeReboot, for giving me this opportunity. I represent Olam. Olam is a global food and agri supply chain producer, grower, trader. Present is in almost 70 plus countries across the globe, and we come across with many regions, many regional issues, regional disparities. Good question. If I harp back on your question on India-UAE relationships, I'd say a lot of people may not be aware or say would consider India-UAE relationship mostly centered around hydrocarbons and metals. But I would be surprised to know that on agri, we are almost seeing close to 100% growth over last few years on few of the products that we supply. For example, something like coffee or say spices. Coffee we have seen earlier what used to be shipped out to Dubai used to go to the countries, adjoining countries, the surrounding countries. But now what we have seen, there is a quite good amount of growth in consumption of the UAE area. There has been specialty cafes. The cup profile have changed. The value addition have increased. Similarly, also for spices, which used to be very small trade between India and UAE, has now grown manifold. So what we see, if we read along with the hydrocarbon imports India do, so obviously we see a very healthy relationship going ahead. We would consider UAE or say the Gulf region as a very natural ally to India, India being one of the largest consumers of energy producers and also to very high value added products with India's economy growing, the food habits changing. UAE becomes a gateway for India to Europe and Middle East. So that is quite, we stand on a very strong wicket, and I feel this has a pretty long way to go. I also would like to touch upon the role of DGCX that has played in India-UAE relationship. So as we can see, DGCX almost accounts for about 1/5 of the Indian currency trade globally. As on 1920. So that is not a small feat, considering that we have quite liquid exchanges in India. Singapore Stock Exchange is also competing. So on that count, if you see, it shows the strength of the relationship of UAE and India.
Yeah, appreciate it. It is impressive. A lot of information which I did not know. So thanks to give us kind of the background on that. Appreciate it. Let's look at this. When we look at the finance, I mean, we discussed a lot about the trade finance gap and the trade finance solution, but how do you see the industries overcoming the trade finance gap in the post-COVID area?
Yeah, so it actually did not start with COVID. There was a few unfortunate incidents where one large global trade house collapsed before COVID actually. And after that, another one or two incidents where large traders have actually gone sideways, or one of them having filing for bankruptcy. So obvious it is natural the risk profile of trading, or say trade finance, has slightly increased in the eye of the banks. Although all understand trade finance is the most secured way of finance because of its self-liquidating nature. So only issue is that people not pricing the risk properly and taking undue risk, and in a heightened volatility, they are not able to manage their risk, or they are not able to do their proper risk management, and really lose their equity entirely. So what COVID has done is COVID has actually amplified the problem. So then those with a slightly lower risk profile found it difficult to refinance their trades. And it was most impact was felt by the MSME sector. You understand, they work on a very thin capital base, having their expertise on the product. So we would say the MSME sector are quite good on their product handling, their importance to the sector, but their finance is not always top class, and at the first instance of heightened risk premium, those are the people who face the maximum problem. We have seen that, so somebody like us, we would not have felt it because of our very strong financing background. But what we have seen to our suppliers, it have impacted. To our buyers who are little say smaller in size, it has impacted. We have taken a very conscious call. What we have done, we have went ahead to our supplier base and tried to make their finance easy by engaging with either banks, or there are few startups. There are say trade finance venture funds. So that has helped. So what we have done is helped our suppliers do the entire KYC with the third-party providers, and also we have taken off the guarantee of payment on due date to the say if there is invoice discounting. The assigned financier, we have guaranteed them payment. So that way we have quite substantially solved the problem of few of our small suppliers, MSME suppliers. Also, just would like to add, I don't know how much time is left. So Government of India and RBI are also in India, at least. They have created a common platform where there are already 3 exchanges already registered for supply chain financing, which is also a good thing. Also with them are global startups with a good capital base behind them. So it is challenging, but we see a hope at the end of the tunnel.
Thank you. That is our hope as well. Yeah, Dhiraj, we have one.
Yeah. I have one question to all the panelists, including you. Suppose India is having a tie with the UAE and having near about $30 billion exports from India to the Dubai. I need to understand that suppose a trader of India wanted to do some business in UAE. What are the opportunities? What are the future outlook is there? So suppose people are exporting to the UAE, how they are safe, what are the outlook, how they can take a call in UAE. So my question is to all of you is that future outlook in the sense of what is the future of the UAE in terms of the commodity, in terms of the safety of the payments, to all of you.
May I?
Please.
Thank you. I think it's an excellent question here, and not because I've been living in UAE for the past 36 years, I am biased to give a favorable reply, but the fact is the whole world is a witness that what Dubai has done with their far-sighted vision and their leadership from the founder of the country until now, his successors, they've been always keen to see that the desert has to become converted into an oasis. And they had reclaimed the sea water to become one of the most tourist hubs in the world, where people leave European best sites and come and have their nice holidays out here in the UAE. And that has explained, when I came to UAE in 1984, population was no more than 1 million. Now there are 11 millions. And if it wasn't for the dent of 2008 crisis, it would have been hitting 14 millions as per the far-sighted vision of the leadership. Now, the infrastructure which has been made out here in the UAE was not made for one decade or for one generation. The fact is that this is one country that I've seen, they've been always, in good and bad times, investing in all across the board. In good times, they have made up all the constructions and the activities to which is a world tourist attraction, as well as an industrial hub. Nonetheless, now in bad times, they were investing in infrastructure and railroads, and you know it. So as when the cycle is about to pick up once again, they'll be ahead of the others. They've gone into artificial intelligence where nobody else has gone in the Middle East, and they're ranked #1 in electronic and digitalization in terms of the developing countries. Now, the location, strategic location of the UAE, being the corridor or the major hub and the gateway to the rest of the Middle East, can put it in a situation which can really leverage and capitalize on their infrastructure. If we realize that a lot of disturbed and unbalanced countries were post the Arab Spring, and not to mention any names, but those countries are within neighborhood and some in the different parts of the Mediterranean. If it goes back to reconstruction and building those countries back again after the demolitions and the destructions and devastations that they have been through due to sectarian wars or involvement of foreign countries and etc., you name it. Dubai will be the only base that will have the security as well as the infrastructure to have that base to be their headquarters for them to reach out and repair. So I would say with all confidence, it has been doing exactly what it could be the platform for the next 30 years ahead. And I would believe no other place can really compete with that.
Very true. I think that's right. You know, the Dubai infrastructures and the tourism place and the policies and like a lot of SEZs are there, and these provide the good infrastructure for having business. And I'm sure about it. You know, to the all participants, the commodity side, Dubai is a gateway for the Middle East. Dubai is a gateway for the African region. Dubai is a gateway of the Europe, and Dubai is a gateway of the entire this side of world. So I think future is always be better. So people can have a trade, and people suppose there are a importer are there, if they are having some issues of 30 days, 90 days credit, definitely we have the Soheil Zali who can give us a finance. And so don't even bother to be exporting to in the UAE. Let's take the finance from Soheil Zali and we can export, and a good future ahead of the UAE.
I think Soheil will have a lot of phone calls right after this webinar.
Yeah, I feel it already. It's ringing already.
Yeah.
I appreciate that. Just one more I want to add about because Dhiraj, you mentioned how they can secure themselves. I mean, default risk and non-payment morality is each country different. So the options what we are providing or other trade finance companies providing is their insurance. I think that is going to play a big role, credit insurance, especially in the market where you don't have the expertise or knowledge. So it is always to have kind of risk management, to review your portfolio in terms of protecting yourself in case of default. And I think that is something what a lot of companies especially learned through the COVID-19, to look at the insurance from the different perspective. And that is something what trade finance companies like TradeWind can offer to the companies around the world, especially the India community.
Great. So my one more question to the last Mali. Being a lot of people are from the India side and watching this program, and there might be a first-time exporter. They maybe have the different commodities, and how they can source the market into UAE. First, another point. Second point is how other commodities like commodities which you are in the on the commodity exchange you're heading, that you might be understand some goods are exporting to UAE from Europe, some are from Africa, some are from US. So how India can be competitive and can export better than these countries, and new people can took a challenge and export to the UAE?
Thank you. I mean, you two very detailed questions there. Can you just go on to mute, because I think you've got some background speaker. Thank you, Dhiraj. Yeah, I'm just conscious of time. How long do I have to answer those two questions? Look, the relationships, the legacy, the history between India and the UAE are well proven, as Salam has said as well. The appetite for partnership between the two countries is great. The ease of setting up a business here in the UAE is very straightforward. I would point anyone listening to the DMCC, Dubai Multi-Commodity Center. They are my shareholder, so that's just acknowledge that. But the DMCC have already, I think, 18,000 SMEs based here in Dubai for the commodity physical flow. Yes, of tea and coffee, but also of gold and diamond. The tax system obviously is well known and understood and very beneficial to businesses. And as Salam mentioned, in terms of the living conditions and working life and the population growth, the federal authorities have made some changes over the last 6 to 12 months to perhaps make areas of cohabitation and a family life much more international in terms of their outlook and accessibility. So the free zones are certainly the way forward in terms of setting up a business here. And if anyone is thinking of doing that, then I'll gladly make the necessary introductions to DMCC.
Thank you. I think it's time to wrap up this session. So thank you, Soheil. Thank you, Les Mali. Thank you, Anil Jena. Thank you, Salam Bhai, for your time and your contribution, your experience to this participant. I believe that with your contribution, people are now very clear. India is a destination for the investment. UAE is a destination for the investment. UAE is a destination for the commodity trade, and definitely we can do the freely trade over there. So with this, thank you to each and everyone, and we'll start the next session.
Thanks for having us. Appreciate the opportunity. Look forward to next time.
Thank you.
Very good.
Thank you.
Thank you.
Bye bye.
Thank you, Anil. Thank you all.
Thank you.